Morning, Wall Street winners. It is Thursday, April the 30th, and the news is a bit grim this morning. If we take a look at the Bloomberg, we can see that the US economy has contracted for the first time since 2022 on a surge in imports. This isn't good news for the US economy. Where it looks like I think we're going to be heading into a recession. There's an old adage of sell in May and go away. And I don't think there's any year where that is more true than now. I am going to be dumping most, if not all, of my equity holdings, and which are minimal at this point because I've gone to mostly cash and just sitting on the sidelines and waiting this out. Trump has come out again after probably less than a week or around a week and started to bash US Federal Reserve Chairman Jerome Powell again, who he said last Tuesday he would not look to terminate or pull out of his role. And that caused the market to bounce in a positive way, upward, recover from Monday's downturn. But it's pretty clear you can't trust a word out of President Trump's mouth. He flip flops between statements, he implements tariffs, he um, changes his mind and he cuts tariffs or he delays tariffs, puts a pause on tariffs, whatever you want to refer to it as. It's just it's so unusual the way in which he's governing the country and really just making a complete mess of his own economy, but also other world economies. We're seeing countries pull back from buying US goods in mass numbers. So even if he brings manufacturing back to the US, there's such negative sentiment towards the US now that it's going to hurt them for years and years to come. I mean, into a new presidential term, whether that's him in a third term because he's again overused his executive authority to make changes to the Constitution, or whether it's a new president of the United States. But it's pretty grim for the markets. We've had some PCE data come in, and that was off this morning as well. So you can see the markets are all in the red, the US indices. If we flip over to the Yahoo Finance app, what we're going to see here is just more really red on the screen around the day. We've got the VIX up about 1.66, which is up in close to the 26 mark. Still way lower than I think it should be. I think we should be hovering around the high 30s, low 40s. Health and retail, which had a great day yesterday, almost all in the red. Healthcare down as well, with the exception of Humana, which is interesting. It had earnings today. I'm going to assume that if it released this morning, then those numbers were positive because it's up, but everything else is down. So I'm just going to be a little bit pessimistic here and say it's going to get pulled down with the rest of the overall market. We go into transport, and transport's continuing to get clobbered. You go into oil and gas, and everything is taking a beating today, but that's because crude's down again below $60 a barrel. So it's getting hammered. And then we go into tech, and we've got some big tech earnings expected later today. But again, it's like super, super red on the screen because we've just got some horrific results in the overall market and some serious pessimism in the market itself. I think an interesting buy going into earnings next week is, or tomorrow actually, is Atlassian, which is symbol team. They came out and had incredible earnings in the first quarter. I expect it'll be very similar this quarter. Might be an upward surprise there, but with the negative sentiment, even an upward surprise like Google had, it has fallen below its pre-earnings price level in terms of a share price. So it's just a market where you want to be extremely cautious. Even companies with good results. SoFi, another great example yesterday. Look at Meta is off $14 in the pre-market. And this is a company that's expected to announce positive earnings and revenue with growth, although growth might be a little muted in compared to previous years, but nonetheless, growth in a time when we're not seeing growth. Google's off almost two and a half, more than $2.50 this morning. And then you've got SoFi, which had great results, and it's down 75 cents, which is significant on a $13 stock. So it's just a gong show. So be careful, be risk averse, pare back your holdings if you can. and look at my idea, or evaluate the idea of buying put options when the markets are up and call options when the markets are down at near levels where they close towards the end of the day. Make your purchases between 3:40 and 4 p.m. in the afternoon, and I think you'll have a pretty good outcome for the next couple of months. Good luck in your trades, and if you're liking the videos, please